To the world of finance and business first with Mr. Marcus Padley from the Marcus Today newsletter. Mr. Padley, good morning.
Yes, morning, John.
Telstra. Whew.
Yes, what do you want to know about Telstra?
How much does David Thodey get paid? Are you going to tell us or shall I?
Oh, I don't know. Yeah, you tell me.
I do. What do you reckon? What do you think then?
I can find it out.
No, don't. Just guess.
I would say 2.4 million. There you go. Complete guess.
Times 6. Try 12.5
Really? Goodness.
$1 million. That's $1 million a month.
God, they rang me up for that job. I turned them down.
Yeah, and you did the right thing too. Who'd want it?
Who'd want that job? Yeah. You know, operating
all those people complaining about mobile dropout.
A monopoly and making $12 million would be terribly hard.
Yeah. It's a lot of money, isn't it? But then he's delivering for the shareholders and
He'd be the highest paid politician, which is basically, I think, what you've got to be with Telstra, haven't you?
Oh, interesting.
Politicians all the time.
What do you make of it, the result?
The Telstra result was yesterday. Everyone loved it because it had a $1 billion buyback. And just to tell you that for those who are wondering whether they're going to benefit out of the buyback, if you've got 975 shares or less, they're going to buy back all your shares. And against the share price of $5.60, if you can utilize all the franking credits, you'll basically get $7. So you're going to make about $1.40 more than you would selling in the market for 975 shares. In fact, anyone with 1,300 shares or less will probably get them all bought back in the buyback, so you'd be tendering all of those in. Otherwise, it's a bit irrelevant for the big shareholders because they're only buying back about 1% of total shares. So it's really to clean up a lot of rats and mice, small shareholders.
People who would have got their 400 share allocation in the initial float, I suspect, and just been sitting on them.
Yes. Well, I would like to meet those wonderfully patient people and blindfolded people because there's been plenty going on between now and then. But basically, if you've got 1,300 shares or so, you want to get your booklet will be sent to you on the 27th, and you need to have a read and tender your shares. And
there is a premium for cashing them in, is there?
Well, what it is that instead of, it's typical of the big buybacks, whereas the share price now is $5.60, $2.33 will be deemed to be capital. So if you paid anywhere above $2.33, you actually get a capital loss for tax reasons as well. And the rest, which is about $3.27, you will be treated as a fully franked dividend. If you include the franking on that as well, you're up to $5.60. So you're basically getting $1.40 more than you get in the market if you can use the franking credits.
Okay, all right. Everyone will get their own advice on whether that suits them or not. Other things?
Get your own advice. Otherwise, we had Dow Jones up 62. Another update. Looks like this correction's over. Futures are up 23. We are up 12. Interestingly, we had a Eurozone GDP number yesterday, which was pitiful. In the last quarter, German GDP's gone into negative territory, minus 0.2, and European GDP 0. People are worrying about Europe not recovering now, and bond yields in Germany went to their lowest on record. So they're not expecting a big recovery there, which has implications for stocks like Brambles, which has European businesses. All that aside, we've got the Aussie dollar at, I've lost my place now, 93.16. We had the iron ore price pretty much unchanged. Gold's up $1.20. Oil was down $2.10. Base metals mostly down. We've got ANZ quarterly results today. They don't have a dividend. They're just quarterly results, but they're a bit weaker than expected, but not drastically. So they're up 8% in total, slightly below, and the share price down 0.6% when most of the other banks are up sort of 0.3, 0.5%. Also, we've also got James Hardie down 7% on results today, and iSelect, which makes a lot of noise on the TV, down again today. It's been really hated since its float, but it's down 3.6% today. They've got some change in trailing commissions, which is lowering the take that they get. It's a bit of a sort of quasi-profits warning.